Dallas, it's only 17% of borrowers go back to the same lender.
What's called the berry button, big red button that I hit.
Hey, remember that?
Right?
And, oh yeah.
All right, everybody, welcome back to another edition of Laugh, Lend, and Eat the podcast. And this is a great episode, guys. I'm telling you right now, sit back, relax, get something good to drink, and enjoy what we're about to get into, because we have the CEO of AIME, Association of Independent Mortgage Experts, Katie Sweeney, on here. Katie, how are you?
Hey, Fobby, I'm good. How are you?
You know how we are. It's mortgage business, baby.
Exactly. I think everybody has the same answer. Surviving. We're all surviving.
Ducking and dodging and doing the best we can.
It's true. It's very true.
Somebody just told me the other day that I can no longer say shucking and jiving.
Oh, so that's a new phrase for me. I don't know that I've ever heard that one before.
Well, I grew up in Virginia, right? So it was like,
okay.
And someone said, "Oh, Fab, you shouldn't say that anymore." And I'm like, dude, I'm like 54. I mean, I don't know what I can say anymore. I don't know.
Exactly. At some, but like, we just say things differently in the South. It is what it is,
Thank you. That's really what it is. So, Katie, listen, you're like the youngest CEO I've had on the show so far.
Wow.
I mean, you're like a freaking CEO. Like when I first met you, right, 4 or 5 years ago at Pac-Man, you were like doing some kind of head of lead generation or something like that, right?
That's exactly right. I was doing lead gen, marketing analytics for the port retention team.
And so 4 years go by and you're the head of a huge association of crazy lunatics.
Yeah, it's been a ride. It's been a wild ride. Lovable lunatics, though, like very lovable lunatics.
I know a lot of them, and they're absolutely horrible.
But look, it's been a crazy 4 years. April of this year will be my 5-year anniversary since coming into the mortgage business, period. So I was in healthcare before I got started. So it's only when I met you, that was my first job in the industry.
So was that rough? Like you, I remember I know I met you 2 or 3 times when I was in Dallas, and there was like this one time you walked in and there was like a bunch of us regionals or whatever we were at that time.
Yeah, it was one of those business review meetings at that long table.
And I remember feeling bad for you because you were so young at that time, right? And it was like a bunch of us 50-year-old guys, and you're like coming in and make this presentation on why lead gen is important to our branches.
Yep.
And all was like, what? Get out of my face, like, right?
Literally, everyone looked at me like I was crazy. Some like 26-year-old who's walking in trying to change the way that we do business, and they were all like, "You're a nutcase! Like, get out of here!"
How did you deal with that? I mean,
I feel like I've always been one to really challenge what people expect. I want to understand why. It's not that I think when I was younger, it got misconstrued as being really stubborn, but in reality, I just want to understand somebody's thought process. I want to know why things are happening a certain way. I don't have to agree. I just want to know the reason behind the decision, because then I can kind of break down, all right, if there is a better way to approach this, at what point in the decision-making process do we need to align so that we come to the same conclusion at the end? And so for me, getting that kind of feedback, it's not good or bad. It was an opportunity to figure out where my thought process pivoted away from everybody else who was in the room at the time. And it turns into a challenge for me. Like, all right, how can I bring this back together?
You have the heart of a salesperson.
People keep saying that.
Yeah, that's
but I'm not a good salesperson.
No, you are. What you just said is all we do in sales. We figure out the objection and we figure out the solution.
I feel like I can sell an idea or a concept or a process more than I can sell a thing. I love people, I love relationships, but if I'm being honest, relationship management isn't necessarily a strength of mine. I am such an introvert. It's exhausting to me to be like out in the world and talking to people. That doesn't give me energy. It's like the exact opposite. So when the time comes, I feel like I can sell when it's needed, but it's definitely not the thing that I default to.
Katie, let's get the biggest question out of the way.
Oh boy.
This is it, right? I mean, this is the number one question I got up, and you know what I mean? We got to get it out of the way, so let's just do it, right?
Okay. All right.
I've got to know where you stand on this Dak Prescott contract.
Oh my God.
$164 million freaking dollars, Katie. Come on. 4 years.
Yeah.
I mean, I'm a Washington Redskin fan or a Washington football team fan. I appreciate you guys doing that because that's like as bonehead move as my owner keeps making. Where do you stand on this, Katie?
The number of text messages I've gotten in the last 24 hours, I can't keep up with them all. And almost all of them say, awesome, congratulations. You've guaranteed yourself to be mediocre for the next 5 years. This is really exciting for everybody else. Like, great. You know, I am actually Fobby, I think we talked about football quite a bit when we first met. I'm a huge sports fan. So it's not just the celebrity of it all. I actually am a true Cowboys fan. I grew up just right outside of Dallas. I live here.
That's why that was the most important question out of the entire episode.
I'm very torn. I'm very torn on this topic because am I completely convinced that Dak has the skills to be able to take the Cowboys from being 8-8 every single year of my entire life to something more successful? No, I'm not totally sold on that just yet. And I refuse to get my hopes up because every time I do, I get let down. The Cowboys haven't been in a Super Bowl since I was 5. So I've never really
won a playoff game.
One. We won one playoff game. We don't one. Like that one we have.
I grew up in the era where either the Redskins or the Cowboys, the NFC East was like this really dominating.
Oh yeah, it was the conference.
Yeah.
Yeah.
We're like,
you know, the joke conference.
We got in the wild card with the 5 and 11 or something like that, 6 and 10.
Yeah. Yep.
Are you kidding me? So
exactly. Exactly. Right. I do like Dak as a person, though. I will say, like, as a community leader and what he brings to the city, especially with Dirk retired. We had Dirk for a really long time with the Mavs. For anybody who's not familiar, he was the guy that was leading all the teams in the city for quite some time. Once he retired, there's been a little bit of a void. Dak has definitely stepped in to fill that. The good guy who gives back. He does a lot around the city. He's not just out partying like crazy like a lot of these guys are. So from that front, we do love him here. We might not love him on the field just yet, but we do love him here.
The good news is you guys have $2 million left for other players.
It's true. With all the restructuring of the O-line, so I'm like, all right, well, we got $2 million.
You can get a punter.
Great. Perfect. We need a kicker. So that's actually probably a good thing.
Welcome to the bottom of the NFC East, Katie.
Honestly, gotten very comfortable.
All right, let's move on here. We beat that one up pretty good. I'm not a sports show. I want to talk about Arrive because you left Pac Union and you went to Arrive.
Yeah.
And that was like a tech company for brokers.
That's right.
Right. And I think they're still doing. I mean, it's not like they disbanded or anything, right? I mean, they're still going.
No, it's still there. It's actually blowing up right now. They're one of the only, at least in the broker community, one of the only LOSs out there that tackled IRLA the right way. And so while there's been steady growth over the last couple of years, both when I was there and then when I stepped over to AIME, because it is a sister company of AIME. They kind of fall, at the time when it was started, AIME and Arrive fell under the same umbrella, different businesses, but exclusive to one another. So we worked really closely with AIME when I was over at Arrive. And now that I'm at AIME, we still work a lot with Arrive. Sure. There's been some steady growth, but really I think the last 90 days, it's exploded. And it's really exciting to see this concept that we dreamt up, similar with what I was trying to do at Pacific Union when we were still there, that wholesale portal that we were, EXP, I think is what it was called, that we were working on.
Yeah.
Yep. Same concept, same idea. The whole reason I was drawn to Arrive was because I was sold on this vision of taking what we had built for a single lender, but applying it to multiple lenders. So really looking at leveling the playing field as much as possible so that all loan officers, whether you're retail, wholesale, can compete successfully in the market and serve consumers the best way possible. So that's where Arrive started.
Is the tech stack that they give to brokers, is that different than say a lender would have? Say Pac Union, since we both have a reference point there.
Yep.
I mean,
a little bit. Yeah, a little bit. Same structure, but an LOS for a broker isn't quite as robust as an LOS that's necessary on the lender side because you're not dealing with any of the underwriting requirements that would go into that. So it is different. But Arrive is even looking at expanding into tackling a lot of the non-Del requirements and may eventually even get into the correspondent world. So it will start to become a lot more in line with what lenders are used to seeing. The advantage with Arrive is that
I guess it's more of a POS, right? Like a point of sale.
It's a point of sale and a broker LOS. So it is a full 1003 full application. All of the pipeline management that a broker would need is in Arrive, even a loan officer. So LOs, if you, again, a Pacific Union or any retail lender that's out there, your loan officer is not going into the underwriting components of an LOS, right? Your loan officer kind of sits in, here's my pipeline, here's the status, here's all the communication that I need to tackle. It's the same thing. It's just a broker has access to this on its own. And Arrive has done a great job of integrating with lender LOSs. So similar to the retail world where you would have your internal LOS giving updates back to your loan officer portal. Now we have wholesale lenders that are able to give updates back to the broker portal. So you're not having to bounce between 20 different platforms like they've been used to doing the last 15 years. You can live in one spot, get all of your updates there, do all of the communication with your borrower, document management. It's all in one place. It's got a pricing engine that's fully integrated with a bunch of lenders. Very easy to use.
It becomes like a hub, like almost like a uniform system, right? Where
exactly.
you log in and everything is kind of done. And
exactly. Yep. That was the vision. Yeah. We wanted to bring, I think one of the advantages that the retail channel had over the broker channel for a really long time was limited access to technology. It just wasn't, when you think about enterprise level solutions, you think retail because they're larger companies, you can leverage them across a greater number of users. Wholesale, you've got a lot of shops that are 5, 10, 15 people, a lot now that are even 1 or 2 person teams.
Right.
You don't have enterprise technology companies wanting to sign contracts with 2 users, right? So we really wanted to bring Arrive to the forefront as an opportunity to leverage all of the great things that the retail channel has access to and make them more readily available to wholesale.
So then what made you leave that? Because you seem like really passionate, like you were talking like there, right? I can just hear the passion right there, right? And also you kind of like leave your passion and your vision and you say, okay, I'll go join AIME, right? And at that time you weren't the CEO or anything.
Nope.
Right? That just happened in January. So I mean, what made you like, okay, I'll see what the other side or the sister company or whatever, the mother company, I don't know what connections are, right? I mean, what made that decision?
So we were doing some really great things at Arrive. The vision was to always get what we could in place with the limited amount of access to developers that we had. So we were a startup. Arrive was a really young company. I was employee number 5 maybe. So brand new when we were trying to stand it up. It didn't exist prior to when maybe it preceded me by a month, but that was about it. So our goal was to spend a couple of years trying to get it to a place where we saw a decent amount of adoption. We could sell the vision to a development team or technology company that could truly execute on the scalability of the tool. We could handle a certain number of users, but we were definitely not prepared, nor were we funded. We didn't have private equity backers. We were self-funded in everything that we were doing. So, and really dependent and reliant on the lenders that agreed to integrate with us and working on. So I really worked on a lot of those contracts. How do we bring lenders in? How do we get them sold on this idea? I keep saying I'm not a salesperson. Now I'm listening to myself. I sold a lot, but
you got the heart.
but it was really like, how do we get this to a point where people understand how necessary this is? And we can bring in a development partner that can take it and run with it and get it to the next level. And when we thought that was a 2 to 3 year plan, ultimately that turned into a year. We had a partner they understood, they got it, they saw the vision, they have a fantastic development team. And there was an opportunity to stay at Arrive and keep working on the vision. There was also an opportunity to take this whole passion that I have about leveling the playing field. I truly believe in, like, I want everybody to be able to compete at the same level. And a lot of that comes from access to technology, information, education, resources, support. There's all of this stuff that goes into that. Yeah. So Arrive was a piece of the puzzle, but AIME really allowed me to expand that and look at all of these other areas that we can provide to the broker community to help them continue to grow, provide that support, provide the resources that are needed. And it seemed like a really good fit at the time. I was going to get to work with more partners. I got to create the Brokers Are Better network, which allowed me to keep working with vendors, technology providers that typically operate in an enterprise space, and bring them to wholesale just in a different capacity.
No, so as a CEO of AIME today, I mean, obviously, look, I mean, you've got a huge challenge, right? I mean, there's a lot of I can't even imagine what you're going through, quite honestly. Okay, you're probably living on 3 hours of sleep a night, I would imagine.
Yeah,
Right?
yep, that's true. I'm like trying to like disguise that I'm not gonna look young for much longer if I don't start sleeping.
No, man. I mean, but there's so many different moving parts that I when I was getting ready for this interview, I was looking at. I was like, this impossible to actually look across and see what's on the horizon for the brokers, right? Because you have to look at the lenders, the banks, the brokers, consumer direct,
Yep.
online applications that are. I was talking to somebody yesterday on Clubhouse, by the way, and they're talking about some company that's going to start off that's just going to do online only. So if you
Yep.
don't have online access, you can't even go on. It's like the whole industry is once again is changing again rapidly, like it was about 15 years ago. What do you think like the biggest challenge right now overall for the brokers really is? I mean, is there like one challenge that you said, okay, if we don't really tackle this,
Yeah.
we don't get past this hurdle?
Yeah. I really think it goes back to the core of what AIME was founded on a few years ago, before I ever even knew what AIME was.
Mhm.
There's a lot of easy answers. I could tell you we need more technology. I could tell you we need to think about sustainability and scalability. I could tell you that there's education and making sure consumers understand what's happening in the market, being community advocates. But at the end of the day, I truly feel like the broker channel in particular is in a position where we have to understand who our partners are and who wants brokers to be around in 10 years and who doesn't. And
Okay.
we need to serve consumers the best way possible, but the best way for us to serve consumers is also to make sure that we exist and that we're taking them to the partners that we know are going to treat them with the same level of respect that we would. And I think there's a lot of people right now trying to exactly what you're referencing. The industry's being shaken up. There's lenders popping up left and right. There's opportunities for consumers popping up from every corner. Real estate agents are starting to get licensed to lend money, which we both know is a really complicated thing and probably not a great idea
That's a great idea.
stay in your lane,
Yes.
but it's happening left and right. Everybody is looking for the next big thing, the next level of advancement, the next thing that they can do to capture additional market share. And for a long time, I think brokers have been really fragmented and not understood the overall impact of who they choose to work with and how that impacts the channel as a whole and not just them as an individual in that single transaction. So really focusing on the long-term play. How do we make sure that we're not just serving consumers the best way possible today, but over an extended period of time? And for us, that was this whole idea of, working with lenders that have respect for our channel, that don't look at brokers like a lead gen source. And I know this because I started there, right? I mean, you referenced it at the beginning.
Yes.
I ran consumer direct. I ran port retention. I worked at a company that looked at wholesale and looked at correspondent as a lead source for our port retention team. We didn't care about sending leads back or notifying a broker when somebody was shopping. We had access to information.
In all fairness, that really wasn't in play at that time also.
It wasn't. No,
I mean,
absolutely not.
I
And
mean,
it's that education that's been so important. Yeah.
it's been kind of the
We just,
pushback from the brokers. I mean, I started off as a broker in 94, right? I
yeah.
was a broker till 94, till 2009, I guess. So it's not like, I mean, to me, it was just, we just never had to deal with it. I mean, it just felt like
Yep.
if you refinanced it, you lost it, but you try to always maintain that contact with the borrower. So
Yep.
at least it gave you a shot.
Exactly. I think where the disconnect happened was technology scaled so quickly in other channels and didn't scale as quickly in the broker channel. So where there was even footing before in that time period that you're referencing, like the broker and the servicer had access to the same information. And as long as you stayed in touch with your borrower at some level, they're going to keep working with you.
Right.
Well, all of a sudden you had servicers and consumer direct online lenders that started gaining access to data sources that brokers don't have access to. So it's not that you're not doing your job to stay in front of your customer. It's that you've now got people that are looking at you saying, oh yeah, we'll pay the broker $2,000 upfront, right? We'll pay their commission or $3,000 because I know once I get them, I have more information about that customer than the broker is ever going to have.
Right.
And all I have to do is market to them in this. I can retarget them on social. I can email their marketing campaigns that run on commercials, the Super Bowl. I mean, everything left and right. Consumers are getting hit with this abundance of information. And yes, we have a responsibility to stay in front of the borrower and make sure they know that we're still a viable option. but we also should be working with partners that respect the fact that that was a relationship that started with a partner of theirs, like
Yeah.
if you went on a date with a girl and you were excited about it, you're not going to love that your friend asks her out tomorrow. That's not a great idea.
That's happened though, Katie.
But it's not great. You're like, oh, wait a second. I thought we were partners. Like I thought we had some, and I think it's really important that people have that conversation, and I'm not going to dictate who you can or can't work with. That's not my job. It's everyone's job to decide what's best for their business.
Didn't United Wholesale just come out and say that? I mean, basically they threw the gauntlet down.
I don't think that. I have a little bit of a different take on that.
Sure you
I
do.
don't
I'd
think.
love to hear your take, because I heard a bunch of stuff, right? I mean,
Yep.
I stay out of those kind of phrases, but I had to like, I was like, when I heard this, I was like, what's this all about? This sounds like absolutely insanity to me. Like, a company can't dictate who you can and can't deal with, in my opinion.
No, they can't, but they can also dictate that you can't work with them if you don't fit specific parameters, right? I mean, there are banks that you're not allowed to sign up as a broker if you don't send them a certain amount of volume every quarter, or if you don't have a specific net worth up front.
Yep.
It's a business requirement, and it's your decision to decide if you agree with it or if you don't. I think this is getting a lot of attention because it was so public, and we all know, I mean, it's not a secret in the industry that UWM and Rocket are not best friends with each other. They're in each other's backyards in the same area in Michigan. It's a competitive relationship, but
they threw Fairway in the mix. I mean, Fairway is like this little, they're like this vanilla company that I never, I mean, you hear about them, but they don't do much, right? Or I don't know.
The Fairway one, I think Fairway's a little bit of a different, there's two different conversations that got rolled into the same discussion, and I think it's made it a little bit confusing. Okay. Fairway, I think, is really largely focused around the fact that we have seen over the last few years, the majority of brokers that exit the channel that go to retail are being recruited by Fairway specifically. So for UWM, they're looking at it and saying, we're investing a lot of resources into brokers, and then they're being recruited to go work at Fairway once they do a certain amount of production. That's not good for the channel, so we don't want to work with them. Not to say that there aren't other lenders that also recruit brokers. We've got brokers that recruit from retail, but when you're looking at the majority of, or a large portion of the percentage going to a single entity, it becomes a little bit easier to say, hey, this isn't a great idea. We're not going to do business with these guys. We don't want what brokers are doing and the relationships that they're building to then remove them from the channel altogether and to go back and start retail branches there. My dog in the fight is less with Fairway. I don't agree with the practice, but that's a UWM decision at the end of the day. I'm definitely much more engaged when it comes to the Rocket side of the discussion and what that means to the channel.
I just think, like, for me, right, and when I was a broker, right, is one of the biggest sacrifices you make when you become a single company, right, is the ability to not be able to look at everybody's rate sheets.
Yeah.
Right, and you guys are big on that. I mean, in your marketing stuff, right, that you guys are able to compare. So if I'm limited even by two different lenders, am I really able to get the best rate now for my consumer in the offhand chance that maybe Fairway happens to be 0.25% better that particular week?
So I have a question for you then. And when you were a broker, were you signed up with all 75 lenders that operated in wholesale?
Probably not, no.
I don't know a single broker who is.
But we never made the claim that we were shopping different rates and giving the lowest rate to the consumer. But
I don't
brokers that I hear talk about doing that kind of stuff. Now,
I think you talk about having a lot of options, right? Not being limited to a single lender. And UWM's not saying that you're limited to a single lender. They're saying you have them plus 72 others, or you have Rocket plus Fairway and 72 others.
Honest, you probably don't need more than 5 lenders, right?
Exactly. You really don't.
About 5 lenders and
5 to 7 is a pretty good, exactly. It's a pretty good spot.
That's the way it always worked out for me. I remember, like, I had my main lender, you know what I mean? And the rep and I were tight. Then we had our BCD lenders. We had our, and whatever that was, and a few straggling here and there that wanted to kind of get our business.
Exactly.
The majority of our business always went to a XYZ lender.
Right. Everyone's got their level of comfort where they know it's not just price, it's also service, it's time, it's speed, it's energy, it's efficiency that you gain from working with a broker or a broker working with a specific lender.
I'll throw a name at you that was my number one lender at that time, was Willie Newman. He was running Interfirst.
Homeboy, yeah.
Right?
Yep.
And he had InterFirst Company, and they were getting, I would say, at least 40% of our volume at that time every month.
Yep.
And he loved it. I mean, I think he gave me an award or whatever at 1 year. But I just wondered, though, at what point do other lenders start saying, well, you can't deal with this lender, or you can't? It just feels like, I don't know, it's like a slippery slope, Katie, to me. That's all.
Yeah.
That's all. And I mean, it just
get
didn't make
that.
me feel comfortable, right? Like, if
get
I'm
that.
a captive agent for XYZ, I know I signed a contract with XYZ to be their retail loan officer, and I can't go shop rates. But if I'm out there in the broker world, I just feel like I don't want to be limited to by anybody. That's all.
I understand that. And we've had some members bring up similar concerns, not that they want to do business with Quicken over UWM, more out of principle of like, wait a minute, I became a business owner because I want to be able to decide for myself. And I understand. At the same time, I would tell you, you don't have to sign the agreement. You know, you don't. You still have a decision. Nobody's telling you or dictating that you have to do one thing or you have to do another. You still have all the options on the table. It's purely creating a business requirement the same way that's always existed in broker agreements. This is just a much more public, much more combative conversation because of who's involved and these two titans that are at the core of this.
Right. My dad always said, when two elephants fight, stay away from that field.
I'm like, you just kind of, you step back and take it,
Yeah.
But
so
I think
this is real quick though. This one's interesting because this is where I saw this UWM thing happening, right? So just the way my head works, right? Is brokers at the end of 2020 or middle of 2020 had 20% of the market share, right? According to Housing Wire, right?
Yep.
And that's 20% of an $11 trillion market. I mean, when you look at those numbers, right, that's like just quick math, right? $2.2 trillion that the brokers are originating.
Yeah.
That's what we're really talking about, right? That's what's at stake. I don't know how many of the percentage of brokers are going to UWM or going to Quicken or Rocket, or whatever they're called nowadays, or Fairway or XYZ. I don't know, you know what I mean? But it seems like that pot, because obviously they feel that number is going to grow, that it's not going to remain 20%.
So I think it's two things. And I will, in the most respectful way possible, speak on behalf of these two companies to a certain extent,
Sure.
with the disclaimer that I obviously don't work at either of them. So take this with a grain of salt. But I think Rocket looks at exactly what you just said as an opportunity. And there's been significant growth in the broker channel, not just in the last year, the last 3 years. Since AIME was founded, the broker channel went from, depending on who you ask, somewhere around 7% market share to right now, we believe that for broker, which is a little bit hard to glean out of all the statistics, that we're somewhere between 22 and 24%. So we've continued to grow. The overall goal to get, we've always said we want to be at 25% by the end of 2021. So on pace to potentially do that. I mean, still going to take a lot of work, but I think if you look at when Rocket got interested in the channel, it was when the growth had already started to occur. They weren't here 10 years ago. They weren't here 5 years ago trying to actively participate in the community. It really became an opportunity, exactly what you just said. And there's a huge percentage of the market that's up for grabs. You can also go to their earnings calls and read the transcripts that say, we retain 80% of the customers that we get from wholesale. That's a great growth story for an investor. So of course they're going to want to stay active in the channel for as long as it lasts, with the understanding that if for whatever reason the tables start to turn at some point, they're prepared to capitalize on the consumer direct side. And they're diversified. They've got a lot of opportunities to make sure that as a business, their market share doesn't completely deplete, even if a specific channel starts to decline aggressively. UWM doesn't have that. It's like go broker or bust. There is no backup plan. There's no other option. So while yes, I'm sure there is an economic component to the decision making, it's also, if brokers don't survive, if they don't last, if they're not in a position to be successful without being reliant on a single organization, they don't survive. That company goes away. And there's 8,000 employees there that are reliant and completely backing the channel and everything that, Matt's vision and the leadership team over there is trying to do. So there are different approaches to how you tackle that. And as a person, again, who's worked consumer direct before, I'm not knocking one business style over the other. Everyone's got to decide for themselves what makes sense. But our mission and our goal is to make sure that brokers are set up to be successful long-term and that they're in a position to sustain their careers over a period of time and not just to be a source that people are looking at as an opportunity in the moment. And I think UWM is continually put that idea forth. They've invested the resources. They help you start your own shop. They give you point of sale for free. You get an LOS for free. You don't even have to send the loan to UWM. You can use Blink without doing that. Brand 360 you can use without using UWM. You've got access to an infinite number of resources. They back AIME and support us wholeheartedly. We need people to come and speak. If we need access to their training teams to put together things for the broker community, them along with the 14 other sponsors that we have are huge contributors to that. Rocket's never made an effort to be a part of that conversation, but they have made an effort to try to capitalize on the opportunity. And that's a problem for me. And I think that's a problem for a lot of brokers.
Kind of back to what I was saying, as the CEO of AIME, you have a lot of challenges to deal with.
A lot of things, a lot of moving pieces.
Right, a lot of moving parts. I mean, we're still talking, right? And that's what I was like, man, Katie, you gotta, I mean, I think I would just say, no, I'm really happy right now, guys. Just me, that I just know myself. I mean, and then you got to deal with. So I got to ask you another question. I got it because I've asked this to Jason Frazier. I've asked this to Laura Brandeo. I've asked this to half a dozen other people, right? I feel as a CEO of AIME, maybe you can explain this to me.
Oh boy. All right.
Okay?
Pressure's on.
Yeah, this is why are brokers better?
Why are brokers better? All right. I can tackle that one.
I mean, because I went through the website, right?
Yep.
I loved your "we believe" statement.
Thank
right?
you.
I thought that was like dead on, but I also felt like anybody who's a mortgage professional could stand behind that "we believe" statement. Didn't have to be a broker.
Yep.
So why divide the industry by saying brokers are better?
I don't think, and that tagline, that slogan preceded my time at AIME. So that was a piece of a core of the community before I got to AIME. But if I'm speaking on behalf of those that were there when it was created, I don't think the intention was ever to be divisive, though I do agree that there have been times where the language has come across that way, and there have been messages that they've done just that. They've been combative. When I stepped into this role at AIME, I told the whole team, my goal is for the whole industry to look at AIME as a competitor and not as somebody who's out here trying to pick a fight just to pick a fight. You can compete without combating. And I really want the industry, and I want everybody to understand that that's the position that we're in. That's my goal for the organization and for the association as a whole. I will compete with you day in and day out, and I will try to kick your butt on the court, but that doesn't mean that we can't have mutual respect for each other outside of the game, right?
I have a lot of friends who are brokers.
Absolutely. I've got a lot of friends that work in retail or work at call centers. You know, we can respect each other's business models without.
We were brokers. We never thought that, the other guy was worse or better. We just figured that was their thing. Like they needed a logo on their business card to go sell mortgages.
And I was going to say, that's where I think brokers are better. And I love what that stands for. I think it was started as something that helped bring people together. It started to draw attention, and it really helped consumers start to understand that broker is a term to not be afraid of. Okay. It got, it wasn't exactly the thing that you wanted to be called in 2008 or 9 or 10.
I was there. I was in the front of that one.
Had a very negative connotation. And so I think this whole mission and that statement and what we wear proudly is an attempt to change the narrative around what that term means and what it stands for, and to have people associate it with something that's a little bit different than maybe what they heard 10 or 15 years ago.
Do you think that having the brokers are better helps you build relationships as AIME, as brokers? I mean, because
with who? It depends on who, with relationships with who.
Yeah, well, let's say with the brokers and the realtors, right? Because realtors are, let's face it, right? Oh, are you a broker? Are you a lender? Are you a bank? Yep. Right? They want to know all these different parameters.
I do think it helps. I absolutely do. I think if you really embody the message behind it, and our message has always been, brokers aren't just better because they're brokers. They're better because they've got access to more information. They have more flexibility in the way they work with consumers. They have more flexibility in the way that they structure deals most of the time. Not every time. There are going to be times, and we have brokers in our community that will tell you, hey, product A, B, or C, I refer it to a bank LO every time because I know I can't compete in that space. But that also contributes to a broker being the best option for a consumer to talk to first, because you're going to get the truth, you're going to get an answer. And they may not have something that they can do that's best suited for you, but they probably know somebody who does and who can help you. And their bottom line and their objective is the consumer that's sitting in front of them, because that's the reputation of their business in their local community. With large retail lenders, that's not always the case. You've got LOs that are more focused on what kind of comp can I pull? Can I get a pricing exception so I don't have to cut my comp, but I can still win on rate?
Right.
Yeah,
Right.
It
I live that
happened.
dream. Yeah, trust me, I live that nightmare.
I
So
can imagine.
do you ever see a future where AIME will allow retail lenders in?
I don't think so. I don't. And it's not because I don't think they are, it's the Association of Independent Mortgage Experts. It really is. It's not that I don't think industry associations can coexist. I would love to build stronger relationships with other associations that are out there that have our friends from retail that are looking at the industry from a different perspective, because I think that's where we grow. If we're challenging one another, we're helping hold each other accountable, which at the end of the day means the customer wins.
Yep.
But I think our objective is to stay solely focused on ensuring our community can be successful long term. It's not meant to be exclusive of any ideology or any thought process. It's intended to be inclusive of the people who we know are aligned with our mission and our goals. We want to make sure that we're positioned to help support those moving forward.
Yeah, so Kevin Delory of Carrington, he was on here also.
Okay.
He promised me a shirt that said "Better Together," because he was big on this whole brokers are better, right? Because of the whole thing that Carrington does. And Kevin and I go back years, so it was just one of those questions that I brought up to him also. Why, you know what I mean? Because to me, I think we're just all better together as mortgage people, helping the consumer win. That's just my opinion.
I would argue though, so for the lender that you work for, do you wear any swag or anything that highlights or talks about why you love? Yeah, exactly. Brokers are better is the same thing. It's a unifying message for a community that has a bunch of really small organizations. We don't have 5,000 person companies to be able to represent a mission.
What I'm feeling from you is that you basically came with and not basically, and I don't want to simplify that, I apologize, but basically what I'm hearing is this message lifted the brokers up together to unite them.
Absolutely it did.
Right? Yeah, right?
It helped push a message. Yeah, it brought the broker community together. It gave us an opportunity to really leverage all of the amazing benefits that they each have individually. There are people from Texas referring loans out to people in New York, and people from New York giving a heads up to people in California and Oregon and Florida. And we have members in all 50 states. We've got, north of 45,000 members at this point. Our weekly reach on communication is over 150,000 people regularly.
Okay.
We've got a lot of people that are listening and paying attention and leveraging the skill sets within the network, right? Mm-hmm. I don't want AIME to be solely dependent on me. I want AIME to be dependent on the community and the network it's created and the content that we push out, the access to information. We get a lot of that from our brokers, from people. I'm not telling them what an LOA checklist should be. I've never been a loan officer. I'm not the person to give that direction.
Right.
I've got a lot of ideas on how to run a business.
I'm pretty sure you could sell the idea once you get it.
I might be able to. But we leverage our community to create a lot of that content because they are the experts. They're the ones that we want to be positioning as thought leaders and raising up together. And the only way for consumers to look at the channel as something positive is if there's a unifying message across the board that every member of ours can leverage. And while I love AIME, an Association of Independent Mortgage Experts, no borrower knows what that means. That's not something that someone's going to see that's going to resonate, that if they walk into a coffee shop wearing an AIME hoodie, nobody's going to ask you, wait, what's that? Right. But if you walk in wearing a shirt that says brokers are better, you start a conversation. It opens up the door to be able to talk to a customer and educate them about an opportunity to work with a local loan officer that maybe they hadn't considered before.
Fair enough. Let's switch gears to something else here. Women's Mortgage Network. Now you got Laura Brandeo in there. You got my buddy Christine Beckwith. I think she supports it also because, Christine and I, we're pretty tight right now and we're doing a lot of stuff together. I don't know if you were with AIME when this idea took root.
I was. Yeah.
So walk me through the genesis of this, because this was really exciting when I heard about this.
Yes, it is. It is something that I've been really passionate about since the very beginning. When I was at Arrive, the AIME's big event every year is called Fuse. So AIME Fuse happens in the end of Q3 every single year, September, October. And so Fuse 2019, I was still at Arrive, and one of our members, one of the AIME members at the time, brought forth and made it very vocal, like, "Hey, you guys don't have any women on stage. You're not highlighting women, and what's up with that? Like, what's the deal? There's nobody speaking on stage. You don't have any leadership represented that are women." And of course, I was a female leader at Arrive at the time, but also the only one. So between AIM and Arrive, I was the only female leader at either of those companies. And so it opened up a dialogue of like, hey, wait a minute, you're right. And not being in healthcare and then in mortgage, I've been in male dominated industries my entire career. And I think to a certain extent, which is a fault of mine, gotten used to it and just didn't really think anything of it anymore.
Sure.
So when she called it out, it was very eye-opening to say, you know what, like, there is something that we need to do about this. This is important. It's something that we need to be talking about. 35% of our members are women. We've got a huge part of our audience that is feeling like they don't have a perspective that's represented in the conversations that we're having. So from that, there was a lot of dialogue. Laura was a huge part of it at the time with Anthony, with myself. And we decided it was time to stand up, not to cannibalize what the Facebook group Brokers Are Better does and what that stands for. And we're, north of 10,000 people in that group now. But that we wanted a space for women to be able to have conversations just in a different way with a different audience, not to say that we need to be catered to or that we have to have nicer conversations because we can't compete with the boys. It was nothing like that. It was more, hey, let's create an audience and a network where we can support one another, ask questions about things that maybe don't relate to the entire community, but are specifically focused on women in the space and in the industry and how we want to grow and run businesses and some of the challenges that come along with those things.
I'll tell you what, Laura is a powerhouse.
She is a powerhouse. She absolutely
she's going to be gone here about 2 more weeks. I'm getting ready for her already. Yeah, she's just like a little dynamo. It's just like always got so much energy. You're like, Laura, calm down.
She has so much passion. And I would say the same thing about Christine. Both of those women have been trailblazers for their entire careers, and where we all share the same passion, we all express it in really different ways. And I think that's one of the things that's great about WMN. It welcomes all of those various approaches to growth and to support and where we want to see the industry go. And we're all doing it from our own seat and our own view and our own way, our own personalities, right? But WMN's been great. It launched in January of last year, so it's a little over a year old. We're very close to 3,000 members in that group already, all wholesale, everybody who's focused on. We've got vendors that are in there. We've got account executives. We have brokers, processors, LOAs, everybody that works in the wholesale channel. So it's a chance to have not just conversations about the business, the mortgage business, but conversations about running businesses, right? And one of the key things that came up was that there's a lot of great associations that support women in our space. There aren't any that are focusing on female leaders within our space. And what that means, it's a lot about providing support and resources to help lift people up. But what happens when you get to that level of being the person in charge and running your own business or being the decision maker? Now what? And that was really our goal for WMN, is so that broker owners and their teams felt really supported.
So do you feel more pressure now? I'll be very honest, like me being a Pakistani, right? Because that's a minority, right? I've always felt a little extra pressure when I walked into a meeting like you walked into that time, right?
Yep.
When I looked around, I was like the only one standing out, right? So I always was cautious of like the things I would say. I wanted to make sure that I was always on top, that I would always be in the top percentage of the performers. Like I couldn't be on the bottom. Otherwise, I felt like I was going to be like, no one would hire another Pakistani again for this role, almost like, you know what I mean?
Yep.
It's an extreme way to describe it, but that's the way it feels sometimes. Do you feel that same pressure being a female as a CEO of a huge organization now? Because you're leading quite a charge, right?
Yeah, so yes and no. I think if I really sit back and think about it, yeah, I do feel like there's some pressure. I think part of it is being a woman. I think part of it is being 30 and not, and also part of it's, I've been in the industry for 5 years. I'm not going to pretend like, in 2008, when everything was happening, I was in high school. I was graduating from high school and going to college. I didn't know what was going on. So
Don't
I'm
say
not,
that.
I'm not going to pretend like I did. I'm a very studious person. I've looked back at the trends. I love data and numbers, and I absolutely have put in the time to understand how we can be best positioned to be successful in the future. But it's also just different if you didn't live it and you weren't there in the moment, and you just get that imposter syndrome kind of creeps in sometimes, and you start to question, should I speak up on this? Should I bite my tongue? Do I let somebody else speak? But at the end of the day, I think for me, and I would tell anybody else that feels like they're in a similar position, you're in that seat because somebody thought that you should be in that seat. And it's my job, it's my responsibility to make sure that the perspective that I have always brought forth and that has gotten me here is the one that's still being represented, or I'm failing at what I was brought here to do. And that, to me, that fear of failure because I didn't speak up, or I didn't say what I wanted to say in the moment, or I didn't hold somebody accountable, or I wasn't responsible for what needed to be done is far worse than feeling like, oh crap, took a misstep here, need to dial it back. That's way worse to me. I would rather be bold and go off the other end of the cliff because I truly believe in my soul that it was the right thing to do than to be stuck sitting on the sidelines.
So, I mean, being a millennial, right? I mean, that's a millennial, right? My daughter, I think she's 27, right? 26, come up on 27, right? So millennial, you're leading a team of millennials.
I am. Yeah.
Right?
Yep.
Is that
almost the whole team?
Yeah. So, I mean, so it's really weird, right? I'm going to just try to think of the question the best way possible. You're in that room 5 years ago with a bunch of 50-year-old guys like myself.
Yep.
Now you're in a room full of young people like yourself, right?
Yeah.
Obviously feels different.
It does.
Does it help you with creativity? Does it help you lead the charge? Does it empower you more? What are the feelings differences?
It does. Not because there is a right or wrong way of thinking in any one specific generation, but the opportunity that we have to learn from other people who have been in the industry a little bit longer is the same opportunity that group has to learn from us on how to communicate with home buyers that are soon going to be the largest segment of buyers in the market. And we provide a perspective, and we're able to look at things and to think about things in a way that has been really uncommon for the industry. My biggest fear coming into mortgage a couple of years ago was that the average age of a loan officer is a little bit older. You don't have a ton of young people coming in.
With my age, by the way. I look at it's my age again.
You don't see a ton of young blood coming into the industry, and it's not going to last if we don't. So there's a handful of different ways that we approach it. Whether it's how do we educate people on why working in mortgage is a great thing and why this industry is a great place to have a really successful, fulfilling career. It's a running joke in the industry. Nobody ever sets out to work in mortgage. You just kind of find yourself here,
Yeah.
But it's great. It's a fantastic industry to be in. My dad used to always tell me there's two industries that are never going to go away: healthcare and mortgage. People have to have healthcare and they have to have a place to live. They can't, no matter how much the world evolves, those two things, they may change. They may not look the same in 10, 15, 20 years, but the industry itself and the expertise you gain from it is always going to be applicable to our world because they're the only two things that people are always going to need.
Nice. And you've done both of them now.
And now it's a both. Yeah, exactly.
Ask your dad what the next industry that's never going to go away.
Food and beverage, like where do I go next?
Gambling's never going to go away.
But I love having a young team. I think there are a lot of industry outlets, associations, people who think it's a negative, that think, we don't have the experience, we haven't been around as long. I would challenge all of them to listen to the perspective that I bring. I've been here 5 years and I think I could hold my own with just about anybody at any table.
I think the worst thing people say is that this is the way we've always done it. I hate that.
Exactly.
It drives me
why?
bonkers. Yeah, it's like there's got to be something better. There's got to be something better. You know what I mean? And without.
And if there's not, let's break it down and make sure that there's not. Just assuming that what's been done is the way that it should be done.
Nobody loved about Rick Skog. One thing I absolutely loved about him was I know it was Jim, right? The guy who ran marketing. And Rick said to me, bring this guy in who's never done mortgage marketing before, Fob.
Yep.
And I was like, brilliant.
He was my first boss. He hired me.
Really?
McDonald's
But
hired
I mean, this is like such a, like bringing somebody that's never done a mortgage flyer in their life, and let's see what they can put together for us.
Yep.
I think those kind of ideas are great. So, Katie, we are running out of time. We are at the end here. I do want to wish you an early birthday. I know you got a birthday coming up in 10 days.
Thank you. Thank
I
you.
know that last year you were home drunk by yourself in the pandemic because we saw your pictures on Facebook.
Oh my God. I was home alone. Everything shut down like 5 days before. Talk about having like a hard time turning 30. You've got all these plans, like 30's hard enough. And then the pandemic hits and 3 days later, you're sitting at home with a bottle of wine trying to figure out what to do. It was not great.
You'll have a little bit less like restrictions.
Yes.
You know what I mean? Hopefully a little bit change. The curve is changing. We're hopefully getting out of this mess, and you can have a great 31st birthday, make up for whatever happened last year. So,
30 round 2. That's what we're calling it. We're just gonna 30 round 2.
All right, buddy. Well, look, I really wish you all the best. You know that I'm a distant admirer of what you've been doing. And I wish you nothing but success with AIME and anything else that you put your heart into. So congratulations on everything you've done so far, and I'll see you soon, okay? Thank you.
Absolutely.
We hope you enjoyed this episode of Laugh, Lend and Eat, the podcast. Once again, thank you to our sponsors, First Option Mortgage and One Good One Staffing Services. We have enjoyed all the comments we have been receiving. Please keep them coming. To be notified of any updates, please be sure to subscribe to Laugh, Lend and Eat on the listening platform of your choice. Thank you for listening and have a great day.